So cool. So let's go over the trades from this morning. So, okay. Okay, so we had SPX and a goal set up, right? We had an entry at 1797.25. This one was the trade. Brian called out pretty easy on this one. We had dollar pushing up into this order block right here. And we also had the monthly right here on the daily. Now, we already kind of know when we have an order block coming and we're trading into the order block, there is always a chance we will get a reaction. And us getting this reaction was equivalent to us getting this reaction on gold as well. So we had this strong down candle. We had this strong up candle right here. And we had this candle for today, which up into this very bullish engulfing candle. And we had a slight rebalance and redelivery of price right here on it, which lined up with a rejection around this area near this low and pushed us up into the order block, right? And as we traded into the order block, we got our first rejection. I don't know necessarily that this is done going up. I think we push a little further into this. We didn't quite get the 50. The high on this candle is 862. I would like to see us get up back around 993 flat, and that's right around this 50%, which I could definitely see us do. And I want to see us reject from there to try to take out some of this seller size liquidity. Because at this point, this is giving us the best setup, right? And it also puts us roughly about 50% of this move right here. Before I really am ready to sell this, sell this, I want to see this push more than 50% up into this entire move. So we got two things at play. This is the FIB levels for this move. It just so happens that we have order block, which is not just so happen. I'm being sarcastic, but we just so happen to have we just so happen to have order block at 6.8, and we got the 70% right here. If you want to go from the body to body, you have still have the 618 sitting right on the inside of the order block and right near the 50s. So lines up for a nice trade entry eventually. So that's what we're going to look at. And as this happens over here, we should be expecting this to push up and then reject to go further if this pushes up to the 50. But we want to look for this rejection off of the 50 for the buy over here, eventually for the buy up. So we will see. I would like to see us push down more into this little area. This is the volume imbalance right here that we left. And I would like for us to push down into this and then take the buy from there. So that's what I'm gonna be looking at over the next couple of days. That kind of lines up with silver. If you like trading silver, trading down into this order block right here. And then we had SPX. That was a nice trade. Both of these trades went well over 100 pips. This one went over 200 pips. We just kind of had to wait on it. So on the coming into the market, we had this rejection already forming over here. 2 rejection candles already gave you a little morning star setup, evening star setup, whichever one it is. I can't remember off the top of my head right now. And I had to call this trade kind of soon as we got on. And the goal initially was to trade down to see if we would rebalance here and then continue to the upside. And it actually tried to do that. It actually tried to do that right here. Whereas we got that initial move down and it rejected and pretty much gave us about 100 pips right here. And like I told you guys this morning, to go ahead and close out some right here. Some people didn't. Some people didn't. And then some, and I also told you to move your entry at break even. Now, here's the thing. Now, for me, depending on how the trade looks, I'm usually gonna always take, I tell people this, every time I'm at 100 pips, I'm usually gonna take a piece off, regardless. And the only times that I don't take off is if it's just flying, and and there's no reason for you to take anything off. Like say it just went directly to TP3, directly to TP4, right? I'm probably not gonna take, the whole thing off. If it's got the TP2 and it's still looking like it's a chance that it can move the way I want to, I'm gonna leave a piece in usually. I'm gonna always leave a piece in. Now, it came back and rejected right here and pushed back up. Now, if you got stopped out this morning, that's okay. I can see why, because I did say move it to break even. But even in this kind of case, if I left a piece in right here, I'm still just gonna keep my, sometimes I'm gonna usually keep my stop loss the same, or I might lower it, or if I'm in front of the computer, I'll just watch it, right? And see how it goes. Because if I'm in front of the computer, I can see the trade and I can manage the stop loss myself. And because I didn't, I just stayed in this trade and let it go and do what it's gonna do. Sometimes you have to do that, Sometimes you got to do that. I also entered this trade. I didn't call it out. I didn't feel too confident about it, but it ended up giving me pretty much a no drawdown on this. So sorry I didn't get that out on the call. But overall, that was really, both were really good trades. Both end up going at the most here to here. We dropped 250 pips. I believe that some people were able to get in up here too. So I think a few people got in up there, but that ended up being 270 pips on that move. So so overall, this would have 500 pips total. If you took this move down, you could have at most gotten like, almost 600 pips off of just this one trade. So, and then you add in gold gave you another 100 pips. So, today was really, really decent day. And that was, we had also this little rebalance off of this area right here. Initially, from here, we had this big wick, traded through it on this candle, came back, held this low of this wick, and pushed right back down. Now, before I got off, I was telling you guys that this is the area that would need to hold if it was going to continue to go lower. What just happened? This is the area right here. Since we had this whole candle could potentially, so you have from the low to the bottom, and if price is going to stay below this, if price can't break above this, then you have a setup for this to continue. I even wrote notes on this. If see what happened here on the candle, on this candle, referring to the 9 o'clock candle right here. This candle made the long wick. And when you see those kind of things, if you're expecting it to continue in your direction, you want to see that the candle does exactly like it just did, where it traded through the wick, makes a little low, comes back and rebalances price right here and continues down. Now, we didn't get the continuation. We thought that we would get, because normally when you see this rebalance and redelivery of price, you're going to have a massive continuation in whatever direction you're going in. We didn't get it. That's okay. But sometimes that's not going to be the case. But a lot of times when you use this, you can usually get a nice trade set up and you without having to pressure. And then another thing you can use this for is if you miss the initial move, and you think you still got a lot of room left, you can use this to get into the middle of some moves. Now, sometimes you can't, it doesn't work, of course, but just imagine you seeing this drop right here. You had a rebalance and redelivery situation right here. This wick trades through it. The next wick comes and drops it. If you missed that, you had this close to this low. You see the price push down, trades through it mostly. It trades through it mostly on this candle and pushes back up. But from this low to this high, we never got above that. And then you would have had two opportunities right here. So you had 1, 2, 3, 4 opportunities to jump in this trade and with some confidence still, even though you didn't catch the break on that, right? So yeah. And you can see a couple of other examples to the upside. This is the candle right here. Price tried and failed, traded through it finally. You want to look back at this wick high down to this body. You got a wick entry right here, and then price just runs, right? Price just runs. Even here, a bearish example, long wick, price trades through it. It tries to rebalance on these candles and it doesn't. But as you can see at the body, you had this candle, this candle, this candle give you clean entries based off of that. So immediate rebalance right here from this low to this wick, trades right through it, wick and goes. So those are some examples that you want to try to
trade right through it.
So is that Nicole?
Yes, hi Corey.
What up, homie? I ain't heard from you in so long. So
I was out sick.
So when I say trades right through it, Like, so you'll see this candle has a long wick to the downside, right? And then this candle trades through the wick. So you got a long wick here, but then the wick gets filled in by all of this trading volume. And then after it gets filled in, you want to see that price does not come back above either this low or this close right here. And if it doesn't, you can set yourself up
In the wick of the body.
really, really good entry. Really, really good entry. From between this close and this low right here. So you looking at this low to this close. And as you see price come back into this area, you start to get ready to take your setups for this. Even though this traded all the way back up to the close, that still was a good example. But I think, you know, I can show you a couple more. Here, right here. Now
That's
this
only
one
impulse
is,
candles.
huh?
This is only on impulse candles.
It's impulse and wick candles. You need the combination of a wick, an impulse candle, and then you look for the body and the low, or the body and the high of the wick. So like this is an example right here of one that failed, right? You had a long wick to the downside. You had price trade through the wick right here. And then once price
came back up.
it never held the body, right?
Mm-hmm.
So that's a sign like, okay, cool. It's not ready to continue, right? But if you get an example like this is a long wick to the upside. Price came and traded through it, right? On the upside. So this is a sign that this could be going back in the opposite direction. And if you look at the wick, if you look at the close of this wick, I mean, the body to the close of the wick in the opposite direction, this never really closed below, except for these two, but it pretty much still held and went and continued.
That would be so confusing.
It sound like it, but it sound like it, right? And I feel you. I absolutely feel you. But
it's kind of,
you got to back test. Like if you back test this, is you'll see it every time. Like even right here, like I was showing you earlier, wick, engulfing candle. Here's the close.
Mm-hmm.
There's the low. You don't get the immediate rebalance, but two candles later, you get it right here. And then it just drops. Right? You see it? Okay. Just back test it. That's all I'm gonna say.
You say the rebalance, you can close in the previous.
You're basically closing in the body of that wick. And
okay.
you're having price return into the direction that it wants to. You're mitigating the trade. Happen right here too. Candle right here, these two right here. But okay, enough of that. Let me go ahead and go into the question. So Genese said, how do you use the FIBS for X's and entries. So if I'm using the FIBS, if we take, let's take this little swing right here. And, from this little short-term high, this low, right? So if I'm looking at this, the main areas that maybe you want to take this off the 15, right? And you would have had this low, this higher low to this lower low. And that's kind of why I like using this tool, because it clearly defines where your higher highs and your lows are, and it clearly measures your impulse. So this was the impulse for this trade from 45.39 down to 45.12, right? And seeing that move, right? This is the move. If you believe this is going to continue to the downside, you're going to drop your fibs on that high and that low, and you're going to expect price to give you an entry within these particular areas. So I like to trade from the 50%, 618, 70, or 78%. I typically shy away from 50%. Sometimes I'll take it, but I'm going to lower my risk at that point. And as far as getting my targets, right? Once I get my entry from either one of those levels, once I see price at those levels, there's two things I'm going to do. I'm going to see the prices at the 50% from maybe the higher time frame. Then I'm going to drop down to maybe a lower time frame, 1 minute, 5 minute, 15 minute, depending on whatever chart I'm looking at. And then I'm going to start looking for rejection. If I thought this was going to continue, and I would be looking to see if I get any rejection or any candles or any patterns at these levels to say that this may be ready to go. And once I get that, I am going to be looking initially to trade from this area back down to zero. That's usually my initial target from here. At zero, you're typically going to be at least, usually 100 to 150 pips into profit. That's usually what you're going to get out of that zero trade. If you can get that, my next level is going to be at -2.7. I'm going to take another piece off of that right there. If I can trade through the -2.7, I'm going to be looking at -6.18 to trade to that. And then finally, I'll be trying to get to -100. And at that point, I would have made a symmetrical move to the downside. And it would be vice versa in the opposite direction. If I was looking at a buy, I would still be looking at these levels, and I would still be looking at these targets. So usually when you guys ask me like what my TPs are, I don't usually consider them. I just know I'm either going to be, if I get a wick entry off of an impulse, I know I'm going to be looking to take out the most recent low. That's usually going to be or that's usually going to be my target. Or I'm going to be looking to take out the most recent high. That's going to usually be my first area of interest, right? And I may or may not take out a big piece of the trade depending on how the chart looks. So I hope that answered the question. If it did, drop a 7 in the chat. If you did, if it didn't, just give me a finger or something. Cool. Also ask, Felecia asks, how do you balance trading and working? So that's a good question. And what you have to do is if you're going to be trading and working, and that way you don't want to miss your setups, you're going to have to stick to some FX pairs. And if you don't stick with FX pairs, you're going to have to trade with very, lower lot sizes. Let me find the chart. So where is it? So you're going to have to do one or two of those things, right? So if you're going to be that person that is, can't look at the charts, can't do anything, but you understand like market structure, right? So let's look at this chart right here at NAS 100, right? And if we're looking at a daily area, right? And if we understand order block concept, we can see that if price came down here from a daily perspective, and we know we got this order block right here, and then we also have this little breaker or this support right here, I would be looking at those two areas to likely take a trade from, right? Maybe I would take a buy from here or a buy from here, because I already see that price pushed down, traded back up through this area. So it's a high probability that we could get a trade off of this area. And then I also see this area and this area, this old high, and then this other order block right here. So what I would do is I'm going to take my FIBS, and one, I'm going to measure this move from this low, because this is the last move, to this high, right? That's going to be one. And I'm going to look for, on a longer term perspective, I'm going to be looking for the price, one, to return back down to this 50%, down to this 618 area. So for me, what I'm going to do is I'm dropping alerts right here, here, and here, and here. So either I can just, whenever I come back to my charts and I get my alert for this, I can go ahead and check out and see what price is doing at this area and make the decision of whether or not I'm going to buy it or not. If I decide, you know what, I'm okay, I'm going to use only a small lot size, and I'm going to just go ahead and drop an order on the chart right here, right? And I'm going to be comfortable with whatever happens as long as it doesn't break down below this order block, right? So I would be saying that at 50%, I would be willing to enter this trade. And my stop loss would be here. And I am going to be looking to take my trade up to here, which would give me almost a 1.5 to 1 trade, right? If I was to do that, I need to be targeting at least the -2.7, right? So that'll put me pretty much about at 2 to 1 on that trade. And that means that if I'm going to take this trade right here, and I'm going to be willing to just put a pending order at this area or at one of these areas below this, then I am not going to be using a large lot size. So if I'm going to take this trade, this is 367 pips, right? To gain 769 pips. At some point, I would be using like maybe a 0.1, for this trade, where at most I would lose is $376. I would be willing to be looking to gain 499 off of this, or 767 off of that. Yeah, that is absolutely true. It's quite often that you'll see an order block at these kill zone levels. Is very, 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 very often. You'll see sometimes an order block sitting right on top of this. You even got one we were just looking at. We were just looking at gold and dollar. I'm sorry. So we were just looking at dollar, right? And if we are considering this high to this low, this order block is right in that kill zone, right? It's not a coincidence, right? If we throw the FIBS on there, this high to this low, there's 50%, there's 618, there's 70%, all right here by this order block. So you need those to drive impulses. So when would I use 50%? So when I would use 50% is if I see that there is a strong rejection right there, initial rejection. And then what I'm going to do is drop down to those lower time frames and kind of see, and just to get an idea of if price is actually going to respond to that area or not. And that's also another reason why I tell you guys, once you are up 50 to 100 pips, in most, I won't say most cases, but a lot of cases, it's not usually going to come back, you know. And if it does come back and wick you out at break even, that's okay. You know, you still would have likely had the opportunity to get in that trade, take 100, take 50 pips out of that trade at any point, right? That's why these areas are pivotal, because getting in at these areas, even if you're not in the right direction, you likely will have the opportunity to get in the trade, get at least 100 pips out of the trade or 50 pips out of the trade. If you're looking at Forex pairs, you're talking about 30 to 50 pips on the trade, with even if you're in the wrong direction. So that's really, really a good reason, good question, good comment. So go here. So yeah, Felecia, you want to stick to the higher time frames, everything from higher time frames. I would typically be looking at 4 hour daily. I would be looking at maybe the weekly, but that one's going to be a more longer term approach, right? And that way, you know, you can still make a lot of money. You might have to, you know, you might not be able to look at SPX so much, because SPX moves, or NAS or US 30, they move so quick and so fast. So you might not be able to look at those. But like take on a pair like GA, GU, USD ZAR, those move pretty fast. And EU, those move pretty predictable, and they give you a decent number of pips. And if you're trading it off of the higher time frame, you can still get those 100 pip moves, 200 pip moves, because you're looking at it and you're getting it off of the higher time frame. And it also lets you just get into a trade and just be chilling, you know, like.
Thank you. Okay, thanks.
So, yeah. How do you adjust if you miss a move? So if you miss the move, the things you want to do is you want to look and consider, like, is it setting up to continue, or is it going to be reversing, right? at whatever the area you're looking at, right? If it's something that you think and see that is going to continue, at that point, I'm just looking at areas where I think we could get a rejection from. So let's say, I think a good example of let's use gold. Okay. So the entry we took was $17. Was roughly around here, right? So if I'm here and our entry was here, right? This broke this structure, right? This broke this structure, this area right here. Now, your question is, all right, I missed this entry right here. Where else could I see myself getting into this trade? If I still think it's going to go down, then I need to find where the next area of structure is. That would have been this area, right? And then you can also already see my daily is right here. So if it break and retest here, I'm going to be looking at this area to take a trade from. I can even go as low as this area. If I miss this area, the next area is right here. If I miss that area, the next area is right here. So every time you break a level, you're going to be looking at where else it could possibly go to. So if this was the area, we would have broke this area. We got in a trade here. This is our next area. Did it break and retest right here? Yes, it did, but it left us a little short of the area. Okay, cool. So I'm gonna look right here. Did it break and retest it right here? It gave it to us right here. Did it break and retest right here? It gave it to us right here as well. So I would have been able to take this down from here to wherever it goes, right? Now, if you think that it's going to, reverse or something like that, find out, like, look to your left and you want to find out, if it's going to potentially reverse, have I missed the move yet? So if I think that this is going to go in the opposite direction, maybe you want to wait for it to clear the next major area of structure. So let's say you miss this, but you think that it may trade back up from here, right? I would be looking at these lows right here, or one of these lows right here, to get into the trade with the next time, because I don't want to put myself in the situation where I've let the price go and be overextended before I try to get in, because then you can either get wicked out with a long candle in the wrong direction and it end up going your direction, or you could be sitting in a bunch of drawdown if you don't take those precautions. So I hope that answered your question, Naomi.
Corey, I was about to type it.
Yeah.
I have a question on what you were saying.
Okay.
You said structure like 3 times. What do you mean by structure?
So if we took this off of 15-minute, right? We took this entry off of the 15. On the 15, this is a low. These are lows right here. Break and retest was right here at the entry. The next area of structure we would have had was this rejection to this high, right? So we traded out of this small range right here. Our next area was this even larger range, this high, this low, for this full area, right? This would have been our next area, our next break of structure right here. So you had this little area from this low up to this high right here. Then you would have had this area right here, this low, or you could have considered this area. This would have been your next area, right? Then you would have had this area right here. These are targets just as much as they're areas that you can trade from as well. So the same way that we broke in retest here, we could have tried to break in retest here. We could have tried to break in retest. Oops. Here at this area. And then finally at this area right here. So, you know, it's you know, kind of how you see the chart moving, how you see everything playing out. If you have a strong belief that this is going to continue, and it did, these would have been also areas you could have stacked on, or you could have got in on if you missed it. You would just want to likely lower your lot size as price goes down, because that way you don't want to put yourself in a trade entry right here, and then the price pulls all the way back up here and you're closing the trade, and as soon as you close the trade, it goes ahead and drop. Usually that's what happens if you just go in from a lower area or a higher area. That answer the question?
Is there?
Okay. This is what you would do if you want to stack. And this is what you want to do if you miss the entry. So if you're looking at that, then you know, if you're looking at this as your initial entry, maybe you want to go in on a small lot size here, another smaller lot size here, another smaller lot size in this area. But after that, there's nowhere for you to enter in at, right? So once you broke this area, where do you have to get in? Where do you have as a reference? Nothing in our immediate area. We can keep going. Nothing in the immediate area until we get over here. And to this for me is a little too far out of our range, our present little range, for me to look at something for entry based off of the setup that we just took over here. You in Atlanta, Garvaundo? You down here? Oh, oh, okay.
Don't sound so disappointed, Corey.
Oh,
Goodness.
no.
Can I
I
get
was
some
just
love?
asking. I was just asking. I was just asking. Yeah, so yeah, that's pretty much it. Then Wendy, are you still on? Let me make sure you're still on. Wendy, yep. Wendy asked, how do you avoid getting kicked out at TP1? That's a gray area, right? Because sometimes you can't avoid it. Like you can't sometimes. And no matter how hard you try, you can't avoid it sometimes, because if depending on where you got in at, like depending on where you got in, depending on what you're willing to do as far as targets go, it's gonna make you make different decisions, right? So if you got in this gold trade, you pretty much immediately ran down to a nice area, right? Even if you're not using TPs, right? You got enough pips to say that you got a good trade in, right? Now, are you going to be greedy and let this come back to your target if you just went 150 pips in profit? Yes or no, that's up to you, right? Or let's say you got in on this candle right here. Let's zoom in. So let's say you got in on this candle right here, right? This was a situation where this hit your first target right here at 28 pips, right? Then came back up. And if you had to move your stop loss to break even, you would have got taken out right here. Or if you had to move your stop loss in a little profit on this candle, you would have got taken out. But if you had done that, you would have missed all of this good, juicy move, right? So it's a judgment call in some cases, right? You have to use other things that are happening in your trade to say, all right, yes, this came back to my entry, but I feel as though it could go in a certain way because when it came back up here, it didn't actually reject. So you're going to have to be willing to let the candles close. That's one thing, right? So a lot of people get into trades and they'll see the target get hit, right? And then the candle will return back to their entry area and they'll get spooked out when they see it at their entry and they'll just take TP1 or they'll have a hard TP at TP1 and they never move the target, right? So sometimes you have to, like, the one thing you need to do is to let the candle close so you can see what it's actually trying to do. Because a lot of times those candles are fake out candles and they just are taking stops or it's a stop run and it's gonna actually go in your direction. It just had to push up or push down one time to grab some more liquidity and then go in the direction that it intended to. So that's kind of one of the main ways you can avoid it. And then the second thing is, I would say look at the other factors of why did you get into this trade? Was there negative news in the trade or positive news in the trade? And if it was, um, I'm you have to be a little patient with the trade sometimes, right? If it's negative news and it just shoots down immediately, right? There is a probability that it's going to return back to the area that is shot down. Now, you need to be asking yourself, is this a strong push down to the downside because it is going to reverse even though it had this type of news? Or is this just a retest at the area? You have to make those conscious decisions throughout your trading process. And if you can see, okay, yes, this is a negative news. I checked all the futures. I checked the stocks. Biden tweeted out something crazy. Trump got his Twitter account back and then he tweeted something about Biden. And then, okay, all that's good. Okay, check, check, check. I checked off Biden. I checked off Trump. I checked off Bloomberg. I checked off CNBC, Forex Factory, my FX book. Cool. All of them still point to the downside. All right. So instead of me moving my stop loss to break even, if my stop loss was initially here and I see that it could return to price, maybe I'm just going to move it to here. Or maybe I'll move it to here, right? And okay, if I do have price return, I'm only gonna, lose this much, right? So you got to be willing to lose just as much as you're willing to win. So maybe you want to take a partial out at TP1 if you feel like it won't continue. Even with our SPX trade this morning, where was it? You can see our entry was on this candle. on this one right here. We got a drop. The next candle gave us a drop. And for some people, they closed down here. And then other people, you know, I'm watching the trade, so I can see that I'm going to be good as long as it doesn't close above this high. If it closes above this high, then that's when I'll be like, okay, cool. I lost the trade. I don't need to close this. I don't need to touch my stop loss yet. Even if it had came up here, right? Maybe I would have gave myself this high or this little high, right? I don't need to close it. I don't need to stop. But after that point, then I just took out high. It may be reversed and going in the opposite direction, especially with this
Corey,
wick candle.
Corey,
Yep.
quick question. Why
Yep.
you pick that high with the wick? Is it because that's where the push up stopped?
This one
Yeah, why did you pick there?
as a stop loss.
Yeah.
Okay, because at the time, trading off of our 15, right? This was our most recent high that was made. This was our entry here at, let me see, 18, where you at? 18 right here. And I had already saw that this candle wasn't going to rebalance right here. And because it didn't, that was the initial catalyst to, okay, this is going to go down. And as long as this high doesn't get taken out, I'm okay to stay in this trade. And me choosing this high right here is because this is the most recent high that was made right here. And with me saying, basing this setup off of a lower time frame, you can get tighter stop losses because of that. If I'm going to use this now, if this had kept going up, maybe if I'm taking this trade off the 1 hour, I might have used this high or this high right here. It's all going to be like in conjunction with what time frame you're using to enter your trades from, as to which high or which low you might want to use for your stop loss. But at the time,
That's my thing, because I looked at the 1 hour and I marked up my chart, but yeah, I forgot the 15 to pay attention to the highs and the lows, because I wasn't exactly sure how high it was going, but I marked it up on the 1 hour, and I'm proud of myself because it came there exactly and wicked, but I thought it would have continued down some more, but it didn't.
it didn't. Yeah, it didn't. And that's okay.
Yeah.
That's okay.
Do you think it's gonna come back there though? Because I see another area that I was looking at, but I didn't know.
I mean, it's a lot of negative news right now. I'll say that. I'll also say that I think that before it comes back down, before it goes down for real, we might retest the weekly.
Okay. Yeah, you see that big blue candle? That's the one I was looking at.
Which one? This one?
No, over, all the way to the left. All the way over, all the way over, all the way over. Yeah, that one.
Yeah, yeah.
And you see it just wicked and it didn't do anything else.
Yeah. Yeah, I think we get like, if you look at this on a 4 hour, right? What do we got right here? Here's our high. Here's our low. What do we got right here, Anna? What we got right here, Anna? And then what's over here? And then what's right here and right here? So we got a lot of stuff all in this area. And this just put us in a nice little model for us to continue to the downside right here. Look at everything that's in this area, just right here. All up in here, right? You got your 50% level right here. you can even throw in this moving average if you want to. I don't use it, but that's even telling you the same thing. Moving average, 50%. Order block, 618. Monthly, 70%. Weekly, 786. 50% of the order block right around here, right? You want to break it down to even smaller time frame. This area right here, order block on the even smaller time frames. There's a 786 right here. So there's a lot of things lining up to say this may continue, but you might get a push up to this area first before you get that expansion to the downside. Now, could it happen without this happening? Yeah, it could. But the higher probability is to say, look at all this stuff. I just put a brick on top of a feather right here. This whole brick is on top of this feather trying to get up to the top. It's probably not going to be able to break through that. Probably not.
And one more question. The retracement that you do on the daily, is it between 3 to 5 or 2 to 3? 3 to 5, what am I saying? 2 to 5 or 3 to 5% when you do the retracements?
It is not that I'm doing it.
Well, no, I meant when you measure it, like I watched you measure it. I couldn't remember the numbers though.
Yeah, it's been all year. Every time we've gotten a 3 to 5% move, retracement on price, we got a rejection to the opposite side, right? So I know I said that wrong. I got tongue tied, right?
Yeah.
But anytime we've got a 3 to 5% drop, we've gotten a strong buy off of that area. And every time, I don't know what this is for. Every time we've gotten a 3 to 5% drop in price over the course of a couple of days, we've gotten a nice buy up, right? And a lot of these buys I done caught. Like, I won't even tell y'all why I'm mad still at this day, but I know Wale know. I know Wale knows he's mad about this.
I don't know why you keep on bringing it up. I keep on trying to forget about it.
I have to.
My Lord.
I have to, because I have to. But you know, this is dated back. Let me delete this too.
Which
Go back.
Sorry.
Huh?
Which indicator is this? This trend line kind of? Which indicator?
That's just a moving average.
Okay.
A good one.
Going back to the beginning of the year, right? January. Measuring tool right here. This high, this low was 5.3%. This drop right here. Now, anytime you get an up move, you can measure that separately, but you don't have to. But it's like we could have broke this one down right here into two different moves, but this little high to this low. This was 2 days of trading, 3.9%, right? And then this rejection down to this low right here, 4.38%, right? That's two different times. Then, and each time we got a low. When we made this low, we got a good buy back up, even though it wasn't the move. We made this low. We got a good buy up right here. And anytime that we make this move, we're making roughly about a 7% bounce off of these areas, right? So we made 2-3% moves right here. And then after that, we got a whole 8% out of this, right? Then right here, this move down right here, this was over the course of 7 days, 3.94% move, right? Then immediately following, we got roughly about, to get us back up to this high, we roughly got about 3 to 4, 2% move back up, right? As soon as we got that, we got another move down that was 3.89%. We got a move that was almost the equivalent back up in the opposite direction. And then we got another move that was 4.9. So roughly 55% right here. And then after that, what happened? We got 7.27% move to the upside. So that's 1, 2, 3, 4, 5, 6 moves, right? Then over here, I'm not going to measure them individually, but overall, this gave you 3.4%. After we got that 3.4%, we had a 10% run. Then after we got that run, we got another 3 to 5% run to the downside, 4.9% right here. Then we got a 5.74% run to the upside. Then we got another how many days was this? This was 3 days, 5 days, 7 days, sorry. Nope, 6 days. 6-day run to the downside for 3.2%. Then we had a 6.1%, 6.15% run to the upside. The last time, and you can just keep going through the charts and seeing this over and over. Every time we got this 3 to 1. The last time we got a move to the downside that was 3% was this move right here, which was 2.97% run to the downside. I'm still in this trade. And this trade has given this trade is given 4.58% already. And pretty much stay in this trade until, we get a move that tells us to get out otherwise. And for you guys that are, doing 9 to 5, if you're going to be looking at setups, this is a way you can do that too, because it's proven to be pretty accurate this year. This strategy is very, very accurate, and it's been paying out without you having to stay in these trades for a long time. You can look at NAS, you can look at SPX, you can look at US 30, you can look at JER 30. All of the indices are giving similar moves, right? So let's remove the drawings, right? Daily chart, where is January? Now, this one is going to be looking a little different, but overall, starting in January right here, for NAS is 6%. That 6% drop gave you a 9% run. This drop was a little more dramatic. This one was 12%. And it gave you 15%. This one was 8%. And this one is still giving. Still giving. You didn't need to even worry about this. And if you had a got in down there, this was almost 16%, right? The next time we get another drop at 5 or more was here. This was 3. Gave you 4, 5 almost. This was pretty much 3. And it gave you, it's given almost 7. So with NAS, I would give a rough estimate to say between 4 and 8% drop over the course of 3 to 5 days. That is probably going to set you up for the next run. So I would say 3 to 8% run to the downside. US 30, it's going to look similar. Get rid of this. Get rid of this stuff right here. Did anybody write this down? Like anybody wrote this down? Because I'm saying this, but I don't have it written down anywhere. And I keep trying to reference this on sometimes. And if somebody wrote it down, please send it to me. I just know this, but I need to stop doing this where I just know stuff and write it down somewhere.
Write down, you talking about the percentages or just the concept of it?
Both.
Oh, it's funny that you brought this up because I had the other day I showed the trees where I had to pretty much put a trend line at the bottom of those daily rejections because I just look at indices as buying opportunities really more than anything.
Yeah.
I just didn't think to read it like how you're doing percentage wise right here.
Mm-hmm. Yep. You really, indices always, you want to go up. You always want to be in a buy mode on indices more than you want to be in a sell. They want it to go up. US 30 got 5 here. Four. Five. 5. 5. No, 3. 3, 9. So basically 4. 2, 9, basically 3. So anywhere between a 5, I'll say 2. I'm just gonna round it between 2% to 5 to 6% move, and is giving you, that was 8. That was 8 and almost 9. This one was 6. Even gave you a last little move up. This one pretty much 9.5. This little move gave you 3.5 if you wanted to look at that. This one gave you 4. This gave you 6.5. This gave you 5.46. And this last little move, still in it, kind of ranging though, it gave you 2.75. So you're getting pretty much a lot more than the move. So yeah, so keep these numbers. If anybody wrote this down, yeah, indices only. You want to look at this for indices only, and it's because they want indices to always be buying. They want them to be going in. They want, just like they want the economy to always go up and be positive, they always want the indices, because the indices are a mirror of the economy, right? This doesn't work on FX pairs or gold or silver or anything like that. It doesn't work because those are contingent. You're trading gold versus the dollar. You're trading silver versus the dollar. You're trading USD versus CAD, right? It's trading two opposing things that are out of the context with each other, right? Gold can do one thing on its own, just like the US dollar can do one thing on its own, right? USD ZAR, that's two different countries. One country can be in one state versus the other country being in another state, right? So it's two things that are in contradiction with each other. Indices is just indices. These are all companies that we want to eventually see make the most money that they can, right? So we always want to be in an uptrend with that because it mirrors the economy. Like, what has it done? What has it always done? This goes back to 2003. What has it been doing since 2003? It's been going up and the times that it's going down, it's doubled and tripled that amount that is going down by 10 times, So you look at JER 30, it's the same thing, We don't even have to look at that. What's been going on this? It's been going up. Yeah, we had some moves down, but it's just been going up though, This since October, right? Since we made this low right here in 2011, all we've been doing is going up. UK 100. It's a little ugly. It is ugly. This was a lot uglier than the rest, but overall, all we've been doing is going up, right? What else we got? The Kiwi, what is this? JP 225, right? This is the Japan index. Which one is it? Let's look at this. What has it been doing? Up, going up. Had some drops right here. That's the 08 crash, right? That's understandable. This is the COVID crash, right? But everything else, even here, ever since 2009, it's been Cardi B. It's been up when it's up, when it's up, when it's up. It's all been Cardi B. All been Cardi B. How far left should you look for in order to help you determine whether or not we missed an entry? That's going to depend on where is the most recent market structure. Can you please look at some examples of backtesting on Ripple with FIBS? I think that I am placing my FIBS wrong. I also want to understand how to tell what fib levels XRP should reject off of. Okay. I'm mad at, I'm low key mad at Ripple and Bitcoin right now.
Yo, I've been marking up Bitcoin. Oh, sorry, go ahead, Nicole.
Yeah, I'm low key a little
She
mad.
said, why y'all mad? No, because I've been marking up Bitcoin on Saturdays or early Sunday morning, and I just catch the move on Sunday, and I had my sell zone marked up. That's the only reason I'm not mad. And I jumped out of the buy. So that's the only reason I'm not mad. But yeah, that was vicious. That was nasty.
Yeah. So I had this, you always ask me about Bitcoin. Let me look
Yes,
at
I
a
am.
clean chart. Let me do it on a clean chart. Coinbase. Okay. Really, the levels you need to know, like overall, like it's like certain levels overall you need to know. You need to know this low to this high. You need to know this low to this high. Then you need to know more recent. This low to this high, or you can look at it in reverse. Well, that I take that back. You need to know one more. You also need to know this recent high that it just made now. That's from this low to this high. Now, the reason why these are important is because this is where everybody is getting all these outlandish projections from, right? And if we look at this initial move, that's where we got 30K projection from, right? If you put the fib extensions on there, all we need is one more. We can put the -2 on there. Guess what that's going to give you? That's going to give you 60K. That's where that projection came from. That's why people knew that once we traded and made this low and started pushing above here, that we would potentially go to 60, right? Now, what is this move to this move telling us? This giving us those outlandish projections that everybody's looking for, right? Let me hide this. You don't need him yet. So after we made this, we got this over here. This is what we need to consider now, right? We've already tapped the 50. We pretty much came down to the 618 at this yearly mark right here. That's why they think 80. That's why they think 100. That's why they think 125, 126. If we add the 200 on there. Where is that telling us? 200x almost. Right? That's where these projections coming from. That's why they getting this. That's why they're making these bold projections, saying that we, I think the latest was Bitcoin to 160K. I think that's what it was. If I measure this, let's go from here to here and restack this, right? They're basically saying that they want to get us out of that 100 range, right? So if I just take this, put this on top, what price is that? That's 140. That's where 140 come in. What's the next? Guess what that is? That's 160. It's 158. That's where that's coming in at. Actually, let me do this. Yep, that's where the 160 come in right there. So that's why they saying this stuff. That's where this stuff is coming from. That's why they're saying we should at least get the negative 168. The negative 161.8. That's what they're saying we should get to. One of these levels in between this area. If this holds this low or this kill zone. If price trades down into this kill zone, like it already has started to, and we hold, that's why they're saying that we should go up to those levels. Now on the short term, and when I say short term, I'm talking about daily, right? We got stuck in a range between the high we made and this low right here. Nothing has came out of that, right? And I literally had a trade sitting probably like, I had an alert right here at this price level, and I was expecting it to sell off from here. And lo and behold, it did. I didn't even have time to react to this. It dropped so fast, and then came right back to basically my bullish order block. And I would have had this trade absolutely perfectly, but I don't want to even talk about it because low key a little PO'd about that, but that's whatever. So at this point, it needs to.
Can I stop you right there? This is where I'm getting lost. And that's a retracement area I had marked up from February 10th. But this is where I'm having issues. How the hell did you know a sell was happening right there?
Right here.
Okay, so this is from you putting the fibs on it?
It's from an order block.
All right, time for
Can't take it.
That's an order block. It's a weekly order block right here. These last two up candles. And then if you want to be more precise, you can just use this last up candle. And that would have had your sell set up pretty much at the low from here. And you would have looked, as long as it didn't trade above this candle right here.
So basically that has nothing to do with the fibs, how you knew about the sale.
Nothing at all.
Oh my God. I just feel like I can't keep up. I mean, I can't keep up. No, I can't. That's no negative self-talk.
Yeah.
Okay, let's put the fibs on it on the naked chart that you had, and let's see if we could we make some sense of the fib levels we're looking for a sale, or no?
I mean, it's gonna be the same thing, right? Go back to this chart. If I wanted to look at this from a fib perspective, right?
Yes.
This is my last low. I mean, this is my last high right here. This is the main low right here. And if you want to be, precise, there's your wick right here. Now, you're already expecting it from now. You have to kind of think in terms of you're not predicting the market, you're just giving projections, right? Now, if you are considering this from this high to this low, your first area is to consider this to sell from is 50%. But what's over here in this price action area that's telling you that it's going to be a real rejection? Nothing. Right? Except for this little breaker right here, this little area right here. This is the only thing, right? Is that usually going to give you, especially with this being so far out of where price is right now and it being at the 50%, like you probably not going to get the move off of this, right? So you can kind of go ahead and if it trades to this, maybe you take a test trade, you would have got some pips. And even this level right here, like it's not on my chart, but this is the 382. It tried to sell right there. Tried to sell it again right there, right? But it failed. You would have got some pips, right? You would have got some good pips, but you wouldn't have got the move, right? Same thing happened at 50%. You would have got pips, but you didn't get the move. Now, once we get into 618, what do we got right here? We have this breaker right here, this structure right here, and we got this little area right here, which you don't see it on this chart, but this is an order block on the lower time frames, right? So this is a small little order block on a smaller time frame, and you're near 618, right? So when price comes over here again, it tries to sell off again. You would have got some pips, some decent pips, but you didn't get the move yet, right? Same thing, you keep going up. You're still around this order block area right here, still around this structure right here. But it's not until you get into this area right here that you're in where the higher time frame order block is, right here in this whole area. If you measure it, it's right here to here. And then we can expand this out. And it literally came up to the low of the order block right here, lines up with this rejection area right here, lines up with the 786 right here. You got the sell from right here. So you could have used fibs too. You could have used fibs, but you would have had to merge some things together, and you would have had to like consider some of the price action that's happening like in this area, in this area, in this area, and this area. And eventually it came up. So like it came up to here and it immediately sold off on the area of rejection, right? And now, if you want to look at where it is right now with reference to price, the order block, and the most recent move, you need to consider, you need to consider this last move up. So we're talking about this low to this now high right here. Right? So now, things that we need to note, right? There's an order block right here. It already traded down to it once. This is around the 382 area. If this is going to bounce, you want to see this push down into this order block, which is why I had this alert right here. There's your 50%. There's your 618. See why I got this other alert right here? That is because we trading down into this order block right here. And then if we go even further, there's one right here that would probably be the lowest that I would look right here. So you
Corey,
have,
sorry, really quick question. I'm sorry. That an order block can be just one candle, not a series of candles, correct? Or
that's
am I?
correct.
Okay.
A series
you.
of candles or a single candle.
Okay. Thank you.
No problem. So 786, you got this one. Still valid. It hasn't been traded off of yet. This one being used, but it's okay, right? That's been used, it's okay. Then this is the most recent one, right at the 50 and the 7 and the 618. So if I'm gonna look to this to buy, I'm waiting for it to come down into this area right here. If I'm gonna look for it to continue to sell, I still know that I have not taken out the 50% of the original order block from off of the weekly. Haven't taken that yet. So I also, that's why I got this alert that's sitting right here and right here, because we haven't taken out this or 50% or the 100% of this order block. And then you can notice over here at 50% of the higher time frame order block, there's another small one right here. This one right here.
Is the order block a certain time of the day?
Huh?
I thought order blocks were a series of candles. So is it a certain time of the day? Like, what is an order block?
That, homie, is a whole session on its own. So what I will do is, if somebody can drop that that chart that I gave you guys before into the chat, it'll kind of explain it all. But it's a lot to kind of understand for me to just say, oh, this one is it, right? But essentially, it's the last up move before you get a move to the downside for a bearish order block. And then it's the last down move before you get an up move for a bullish order block. And you're going to be looking for price to return to those areas and price to mitigate itself, to balance itself out at those areas. And when it does that, you can expect a very, very quick move away from that area, because of these are the areas that banks are entering trades from. That's the quickest way to explain it.
So, Corey, is it an impulse move when it makes that move?
Yes.
That's what I thought. Okay. Thank you.
No problem.
Hey, bro, real quick, did I send the right one that you asked to send?
That's good. Yep, that's good.
Right.
Hey, Corey.
Hey.
Hey, when you put the pending order, do you put it on the 0 or 50% of the
It depends. Sometimes I'll put it on the 0. Sometimes I'll put it on the 50, and sometimes I'll put it on the 100. If I'm going to put it on the 100 or whatever the low of the order block, if I'm going to put it here, this is going to be the smallest entry, right? I'm not going to put a big entry right here. I don't start sizing up until I get higher into the order block. If it just runs away from the low of the order block, then oh well, I'll just let it go. I'm still going to get a nice trade. But in most cases, if I'm going to enter in at an order block, I'm going to use the high of the order block as my stop loss, which should be another high or another low. That's going to be my stop loss. And if I'm entering at the high of the stop loss, of the order block, or the low of the order block, that's going to be the smaller of my entries. I'll size up as it goes into the order block. And if it trades through that, that means that either it's going to just sweep it, or it's going to be or I'm actually at a reversal point, which can happen sometimes. Which can definitely happen sometimes. But the probability is a lot higher that these will be areas that you can take rejection from.
Okay, thank you.
Yeah, I make a suggestion to the person that asked about balancing work. Okay. Yeah.
All right. Yo, so, I mean, when you're working, I would suggest like slowing everything down. Like I simplified it for myself. So what I do is I don't worry about SPX or indices. I just worry about the dollar, and I worry about two pairs, right? So let's just say, for example, my favorite pairs right now are EU and U-Swiss, right? So if you look at the dollar industry, if you look at the dollar index, it's going to do one of two things, right? It's either going to go up or down on a daily or monthly or weekly, it is. So whenever the dollar is going up, U-Swiss is that's my dog. Whenever the dollar is going down, EU is paying me. So it's not like indices where you have to pay attention to like a lot of news and like a lot of like different factors. You just pay attention to the dollar, whatever the dollar is going to do for the week or for the day, you just go based upon those two pairs and not have to like baby it. So like, for example, I wish I could show my screen.
Here, hold on. Go ahead. You should be good.
I'm good. Share screen. Boom. Can you guys see this? Corey, can you see this?
Yep.
Yes.
All right. So I know this looks very, very, very complex, but what I do is, yeah, this is this is my entry, right? It's not really good. It doesn't look like it's an accurate depiction. It should be that is the stop loss. But yeah, anyway, this is my entry. I got in off this wick and I stayed into this joker until I got out here. This is on the 15-minute, right? If you look at the dollar was doing something similar at the same time. So based upon what the dollar did, I got in here and I have stayed into this joker. If you look at the 4-hour, the targets are slightly different, but it's the same process. I lost out on some money up here. I could have continuously gone up, but already got what I needed. I'm not going to be greedy about it. I don't know who asked that question about the job situation, but this will be a good way to go. Just take a break from indices for a little bit, from cryptos, or if indices or cryptos are not doing what they need to do, have a backup. And this could be a good backup. I'm done.
Yeah, and that's facts. And then like even on as you getting those forex pairs, like you can use the higher time frames and stuff like that too. It's a lot more accurate to do that, right? You don't have as many fake outs and stuff like that. And you can just get in and just place pending orders and know, okay, like if I got this set up on let's say this was a forex pair and I'm gonna let this trade down to here. And this will be my stop loss, right? You can know with a lot more confidence that if I put this pending order on the chart and I just leave it there and I use proper risk management, I don't have to worry about this trade. I don't have to worry about this. I know that I'll be able to take a small loss or a big win. Because when you use these levels with the indices, I mean, with forex pairs, is very, very high probability that you're gonna get what you're looking for. If you had a came over here in this area, right? Here's the order block right here. You had 1, 2 beautiful trades, right? And if you wanted to put your FIBS, right, you would have been looking at this, right? Because this is the high, this is the lowest low, right? Price came back up to these areas, you would have been able to put this would have been your order block right here. You can extend that out, right? This is a yearly, this off of the daily. The daily has the yearly opening price in it, right? You could have left a pending order right here at the low of this, and would you have been in this trade still? You absolutely would be. Never came back to the 50. You would have only been in drawdown. You would have risked 40 pips for a trade that has taken you 500 pips in profit on EU. And you would have literally had to do nothing on this, but just be patient with this. So, you know, if you had to use a single or a 0.1, this would have been $500 and some dollars. If you had to been a little bold, use a 10, you're looking at $5,000. You know what I'm saying? So you would have been risking $400 to make $5,000. You know what I'm saying? And doing it without having to do anything but manage your trade. So just like Wale said, like if you can, and if you need to, just back away from them things for a minute and just, you know, look at some other pairs and watch the price action in those. And if anything, it's going to actually help you trade the indices better because you'll be able to be a little more confident with your trades and managing risk and stuff like that. So,
Hey, man, bro.
Yep.
While you on that, well, look like you're on EU. Right quick, can you do an example of what the next order block, I guess, buy would be off of this area? Because when I tried studying order blocks, I'm like, okay, well, how long do I gotta wait till the next one? Or it just seemed like it could be so far away. So right now, it looks like that's one right there where you about to mark. It looks like we could probably buy from off there on the daily. Am I correct or
That's
no?
correct. And like the first thing that I'm doing is when I'm coming to my chart, I'm looking where the most recent one on the top is, the most recent one on the bottom. If it's in a, and I'm doing the opposite. If it's, you know, if it's in a downtrend, you know, an uptrend, right? If it's in an uptrend, I'm like, okay, I got this low. I got this last up move right here. This is the last down move right here, right? So if we down here somewhere, I know, okay, cool. Price should come up to here. It came up to there, it dropped. It came up to it again, it held it, and it dropped. So that's all I'm doing over and over, right? I'm looking at to make projections like, okay, if I'm at this high right here, the next order block or next area that it needs to come to is here, right here, and then here. This is a breaker. This is something else, right? I don't want to talk about that, but this is an area right here, and then this is the order block, right? This is an order block, but there's another term that you would have to use for this, but I'm not going to go into it, but you can just call this an order block. So you would have had this one and this one and this one stacked all in this area right here, that we know that if we make this high right here, it's got to come to one of these areas to trade back up from in the opposite direction. If we open up another chart, let's open up a random chart. Let's open up AUDCHF, right?
Yeah, it's very random, though. I didn't even
Very
think
random,
about it.
right?
I ain't think about them letters, bro.
Right? So equal highs, right? What's right here? 1, 2, 3 setups, right? Now that we at this high though, right? This was the last high. If we're gonna drop, where are we gonna drop to? 1, we got the monthly. That's got to be the first thing. 2, we got a potential rebalance and redelivery setup right here. And then if it still don't hold, what's right here? Order block. Lower time frame, it looks better than this. Right now, it looks like trash. It looks like garbage, right? But what happens when we come right here? Clean order block right here. So if it's going to come down, you got it to come there. It's already used this one on the 4-hour to hold it up there. It might want to use this one right here. But this would be the main thing that I would be looking at right here for this to come to, because it's got the monthly price inside of that. And if you look at this, what would coming down here make? What would this be if price came down here?
Is that just a monthly rejection?
Yeah, but what would that be though?
Inverted head and shoulder.
Facts. Facts. Whoever said that.
I didn't hear him. What did you say?
Inverted head and shoulder.
Yep.
Oh, okay. Completely missed that.
Inverted head and shoulder. And that would be a perfect area to make. Also, if we got our other favorite indicator that we use, what would this make? A low, a lower low, right around here. It would make sense for it to be a low right there. So, and it would make sense for it to, if we look at these two areas, it would make sense for this low to be oversold at this area too. So if I'm looking at this, I'm saying here would be my sell down to here at worst case. All right, man. And then over here, this is where I'm looking to buy. And I would be looking to take out that high from here. If it does it, that would be cool. If it don't, this is where I would be looking from right here. It even looks like it's the right thing to expect. Like just looking at it, it looks like this is the right thing to expect. But if it, if it doesn't, you always have circumstances where this is like the highest probability. But that, this gives you in the right state of mind to look for it to look for. It's not predicting, it's just getting you, giving you a high probability setup, a high probability chance that this is what could happen.
Okay. Okay. I guess because my other thing is like looking at this, and we know that this is a slow moving pair. It's like, okay, we know this ain't gonna happen for at least a few days or maybe a week, possibly, if it does shape out to be like that. Now with indices, is that? I mean, I know I try my best to keep up with your trading style. That's pretty much what you do for every trade that you do with indices, because is it really that many order blocks happening that fast within a week? Okay, I just got to go back and look at it and just study it more then, because I guess when I was marking it up, I was like, we gotta wait a few days for this one here and a few days for that one. So I thought like there's gonna be like a week in between or something like that.
Look at this.
I hope I sound like it is making. I'm trying to explain it the best.
You making sense. Look at this 4-hour order block right here. And this is just a trashy version, right? This a piece of trash right here. I ain't even gonna lie. Right? This is a bullish order block. This is August 29th, right? They used it on the 31st. They pretty much use it again on the 1st. They pretty much use it again on the 20th. On the 3rd, they try to use it again on the 7th. So that's 1, 2, 3, 4 times they use this 4-hour right here, right? Then if you go to the 1 hour,
sorry, my bad. That third, what the second and third one, it didn't exactly touch.
didn't exactly
on
touch it. That's okay. You could have used kind of, you are roughly within like a 20 pip range of this 40 pip right here. This one would have been like 10 pips away. So you would have, of course, you got to use, market structure and stuff like that as a combination of what could happen too. So,
okay,
you got to use chart structures and candlestick stuff. So still can't completely alleviate that stuff. But if you see price coming down towards this area and you get a strong rejection, you might want to be considering loading up on a trade. Not a lot of, not so much as far as order blocks on the bearish side, but because it was a little choppy. However, this one that we made right here, after we traded through this low, and that's the first sign that you are about to get an order block, like this bearish order block, right? You see this low, you see this made a high. Once you see the price trade below it right here, you automatically know that where 0 is a potential order block. So as soon as you see that you make a low where this would have been the actual low that was made right here, it tried to make the low right here, but the low was finally made right here. Your expectation is for it to return back to the order block to mitigate it, to balance it out. So you have 0 to A, that's your order block. A to B is your expansion. And then B to C is the return to the order block. And your expectation should be anywhere in that order block area, you have your return, your expansion in the opposite direction. So anywhere within the order block, you have that expansion. And you should get a measure move out of that. And it should take you to a previous area. Like if we look at this and we get this, it's going to take us into this order block right here, or to this equal low right here and set an equal low at this price. It should take you to an area where it's going to make a low, it's going to create liquidity or equal low or equal or trade down to an order block, or take and fill in an imbalanced area. That's where it's going to go every single time. It's going to go to an area that is going to put you into the next model or next phase or next buy setup for the next move up. If it's selling, if it's buying, it's going to take you to the next move down. If you're in a buy model, it's setting you up to move to the next area of liquidity on the seller side, to the next equal high, or to the next order block, so that it can set up for the next move. I hope y'all understand it. Is this making sense?
It is. It's just something I gotta continuously backtest and study. And you know what? I'm gonna mark them up and just submit them to you as homework and see if I'm getting it right. It does get to be a lot. It's not the easiest thing to read, so I guess I start to get overwhelmed. But it makes sense, but until I start to try it out in live, I'm gonna say it like that.
You need to backtest. I always tell you, man, like I always tell y'all, you need to backtest more than you trade. You need to be backtested.
It's making this.
You breaking up, Neil. Oh, Khalil. I can't hear you at all. It's very choppy.
Okay.
You gotta backtest this stuff more than you're actually trading it. Look at this. This is the order block, bullish order block right here. It took the A to B, it traded back down to it with B. Now, once it's leaving this area, this is the other high. It took that out. This is the other high, it took it out. There's your expansion right here. It's always gonna do that. It's gonna be looking to take out liquidity. Short-term liquidity right here came up to this with no type of retracement, no type of swing, nothing. It just went from B to C pretty much with no type of drawdown or nothing, right? You don't get a move to the downside until you get right here, from here to here. You don't have nothing, no reaction, no swing. You just got clear skies from here to here. The next you get a down move is here. This is fill in this imbalance from here to here. That's where the imbalance is right here. You could have even used this for another buy entry right here. And you would have been saying to yourself, as long as it don't close below this, throw a buy in up here. And what happens after that? The next time you get a high is right here. But from where you enter to the time you get this high, you have nothing in the way, right? Nothing, no swings to the downside at all. You could have left your stop loss where it was for this. Let's say you get in right here, right? Your stop loss would have been here, right? Whatever the case is. During this time on the way up, you didn't even have to touch this. And you never went in the drawdown, never went into nothing. You would have had a trade that was only went in the drawdown 19 pips. And your trade would have gave you 649 pips on this. And the only time when you would have even had to think about your trade going in, ending on you is right here. And even if it goes to that point, that's still 360 pips. But you would have already taken this high out and you would have had no reason to think about exiting this trade until you start getting into this area right here. Maybe your stop loss would have been right here underneath and you would have got stopped out over here. Maybe you took your stop loss right under here and just let it go. And if you had gotten this on the 27th, you could have had the opportunity to get out of this on the 31st, the 1st, 2nd, 3rd, the 6th, because each one of those days it made a new high. And that's where you get in and out of this trade. If you didn't, and you left a runner, you could have exited out the main piece right here, and then you would have got stopped out right here. But you don't get stopped out until September 8th. So that's how you want to do this, fam. But anyway, my mouth is dry. My throat is dry. And been talking for 2 hours and some change. So I'm gonna hop off. I think I answered everybody's questions. Let me get you guys the